All right, good morning, trade pros. Welcome to morning market update for Tuesday, September the 8th of 2020. This is George from Trade Pro Academy, and I am so happy to be back. I'm back with you guys. I missed you a ton. My last update was on August the 17th, and I took some time off. Number one, because there was big news, and number two, summer volatility was in play in August, and I try to avoid over trading on August, and being more patient is kind of the mission, the goal. But on August 20th at 9:30 seconds, our newborn son came into this world, and he's just been a bundle of joy so far. I've loved hanging out with him. Took some time off with my family, and it's been great. It's really been fantastic. I'm sleeping good, I'm eating good, and so is he. Mom and baby are good. I'm very excited. We're back to the markets. Let me just mute the audio. I can tell you one thing about becoming a new dad. I know you guys are going to laugh because it's only been like almost 2.5, 3 weeks now. It's going to be 3 weeks on Thursday. But I could tell being a dad is going to teach me a lot about trading, and I'm looking forward to learning. And I'm always looking forward to learning in the markets, but specifically from a new angle. So before we go forward today, I want to take a moment to thank Victorio for taking over the YouTube live updates every single morning. Hope you enjoyed his coverage, his updates, and his insight. He's a phenomenal trader himself, and so what he has to say is typically important. Not always, but everything I say isn't always important either. Great trader. He really focused on next best trades, and he brings a lot of value to our community. So thank you, Victorio, for helping us out. Another thing you might notice, I changed the background. Look at this. I have a new background in the office. Remember that big giant box that was right here? It's like, hey, I'm probably going to be trading a little bit more from the office. Well, let me make it a little bit more appealing. So I got a chance to do that. Baby in one arm, building furniture with the other. So I'm happy to be back. Thank you guys for having me. The big news is this: summer trading is officially over. Professional traders today are back at their desks. All right, Labor Day is officially the end of summer markets. It's not the season of summer that's over. We still got a couple weeks there, but it's the actual summer seasonality of slow markets. Low volume, low volatility, all that's over. And we ended last week through Thursday and Friday, but today's the day where professional traders are back at the desk. In fact, JP Morgan asked a lot of their staff to come back in to the building starting today. All right, so they're starting to pile back in the office. Typically, or before, they had a quarter of the staff present. Now they're going to have half of the staff present. And so other Wall Street firms are also going to encourage people to start coming back to the office and to work. So the summer is over. There's going to be a lot of opportunity, a lot of volatility. I'm excited to be here with you. With this volatility and an election coming up, the next 10 weeks, you're going to go from 0 to 100. You're going to go from 5-point ranges to saying, oh, I'm going to have to wait an hour for my trade, to having 10, 15 good trade opportunities in a day. So the mission here is to not overtrade and to adjust to this volatility. On Thursday, September 10th at 1 p.m. Eastern, we're going to be hosting a webinar on how to trade volatility, how to trade the election, and we're going to be sharing with you a complete trading strategy on how to adjust. To get access to that for YouTube, click the link in the description. Save your seat. We have a limited number of seats due to our webinar software. So get on there, get early, register now, and be at this webinar. So Thursday, September 10th at 1 p.m. Eastern, live exclusive event. All right, very few firms are doing live events in today's sessions and markets. We're doing that. We're going to put a lot of time and effort into this. The presentation's great. I've already reviewed it, and Vicky's going to be leading it. I'll be there as well. So that's the exciting news. Okay, let's get into the morning market update. Today's going to be a long one. All right, I've been away from August 17th. I'm going to give you all I got in this first session. Forex, it's a boy. We had a baby boy. His name's little Isaiah, and he's a super big cutie. I was going to bring him on today, but he's sound asleep. Didn't want to wake him up. He'll make a YouTube appearance at some point this week, though. All right, let's talk about the NASDAQ whale theory. Softbank, which trades on the pink sheets under SFTVY, has been loading up on huge options positions on tech stocks and the tech stocks themselves over the past several months. All right, they said that they're sitting on $4 billion gain off of this massive long position in technology. So remember wondering who the heck is buying tech so avidly these summer markets? Softbank, right? The big buyer has emerged. It's not just Softbank, though. A lot of retail traders are getting in the game now. A lot of new day traders with this volatility. They're also in there buying call options, and it's worked so far. With this $4 billion gain, though, Softbank shares fell 7% in Tokyo on Monday, which killed $9 billion in market cap. So here's a big lesson to learn. If you sell your investors an idea that you're going to be running a vision fund and investing in small tech at the infancy level, at the grassroots level, when they're small companies, taking a stake in them and growing with them, and then you suddenly go on the open market and you're buying, the biggest firms out there, investors are going to be puzzled. They're going to want cash out. That's a change of course in your strategy. You have no business doing that. And so even though you made $4 billion in paper profit, just lost $9 billion overnight in terms of investors dumping the shares of SoftBank. It's confusion. Nobody wants to be surprised as an investor in terms of what they paid for. All right. Here's why a lot of this gamma chase happened in the options market. So you're going to read articles and you're going to hear gamma. A lot of dealers were chasing gamma. What the heck does that mean? I wanted to break it down to you very simply today in a minute or less. What happens is if you buy a call option on a company like Tesla, who do you buy it from? You can't buy something unless somebody wants to sell it to you. Oftentimes, it's somebody else on the short side of the options, but with everyone buying calls and investing on the upside, who is selling the option? Have you guys ever thought about that? Dealers, option market makers are selling you these call options. If you're short a call option to collect the premium and the stock continues to go up, you're at a loss. How do you hedge your book? You get long the stock. So all these call option buyers at a retail level with SoftBank created a situation where they had to gamma hedge aggressively and it pushed the market upward. Now SoftBank knows that. They know that if you go into a big position, you're going to force some gamma hedging to happen. And the retail traders, as they piled on, really created an environment where it was a self-fulfilling prophecy. The more call option buyers that were created, the more stock buying to hedge out. And this thing kind of chased itself till NASDAQ hit some pretty ridiculous levels. All right, that's what's been going on. In other news, Tesla does not make it into S&P 500 rebalance for the month of September. All right, it's down 15% pre-market today to 366 a share. All right, that's 25% below its prior high, but still 30% above where it was, where the S&P 500 inclusion rumor started to get going. People got excited about it. I missed the Tesla put option by 5 minutes. Let me give you a quick dad story. All right, the sacrifices dads make. I was on the computer here, had Isaiah in my hand, and with one hand, I'm typing on through the charts, looking at Tesla. I'm like, this is going to be a good short. This is like gold. Remember that gold trade? We made 10 grand on one trade in 2 days. I'm like, this is going to be exactly like gold. I'm going to short this big by buying put options. Put options were so cheap because the VIX was low and everybody was buying calls. So I'm like, this is a no-brainer. Looking to load up. He starts crying. I'm like, let me soothe him a little bit. Soothe him. I go to put in my options position. It's 405. So I missed it. But hey, I'm going to just take it out of his college fund. Got to teach him a lesson about supply and demand. I'm not going to take it out of his college fund. All right, so that's the Tesla news up there. Overnight, another thing took place. Remember, I told you it's a long update. Donald Trump yesterday had a speech from the White House where he said that if he is to be elected a second term, he's going to end the U.S. reliance on China. So that if Joe Biden wins, China will take over the U.S. All right, that's paraphrase the second part, but ending the reliance on China is direct from the horse's mouth. All right, he suggested that he was open to a complete decoupling of the world's two largest economies, U.S. and China. All right, ending the trade, the heavy trade with them. Now, that's easy to say and really hard to do. There's a reliance that's kind of built in over time on one another. There are benefits to the U.S. with China trade, and there are negatives to the China trade for the U.S. as well. Those things have to balance. But I mean, Donald Trump has set his agenda for the second term and what he would likely do. The question is this something to rally his voters, or is this a serious type of forward? Because if it is, that's going to be a lot of volatility for a second term for Donald Trump. Decoupling from the Chinese trade relationship has massive consequences for everyone, right? You included, me, and everyone as well, all right? This almost deserves a webinar on its own. We're going to keep track of it, and if the situation gets more serious and more likely, we're going to give you guys some insight on that. For now, you got to keep tabs on that. It's a very important statement, and in one statement, there's years worth of volatility that's built into there. And if he wins a second term, we could be talking about this 3-4 years from now, all right? And we will be talking about it. Remember, just a year and a half ago, not even a year and a half ago, just like 5-6 months ago, the market was fixated on this U.S.-China trade negotiation. All right, we're going to be back to that for a second term if it does happen. All right, in today's markets, in Asia, Japan's up 0.8%, Hong Kong's flat, China's up 0.7. India flat for the day. In Europe, equities gave up their early gains, down 0.4 in London, Paris down 1.5, Frankfurt down 1.1. In the US, Dow's flat, S&P's down 0.6. Overnight low just set minutes ago at 33.63 even on the futures. All right, and NASDAQ down 2.3%. A little bit of a bloodbath in tech continues. Here's why tech has more downside. If you find out a big whale trader has been supporting the upside and they have now officially said we've booked the $4 billion profit. It's not paper. They said they've booked $4 billion, and of their $10 billion position, they said they have taken 7 out. So they sold as the market rallied. Not a surprise. You look at insider selling; they did the same thing. They got out on large scale. Professional traders like to sell highs to get out of their long positions, not to open shorts. All right. So with that big trader gone, the question is, can this rally be sustained by retail alone? And I can tell you this, institutional traders aren't buying all-time highs, all right? And if Softbank isn't buying all-time highs, and if dealer gamma has already been hedged out and they don't need to buy stocks, what's going to be the next dollar that pushes price higher, right? That's what traders are willing to find out. And I think we got a little bit more downside here in the markets as a whole over the next 2 to 3 weeks, plus tech stocks, and we're going to position ourselves accordingly. All right, crude oil is down 4.5% this morning. Overnight from the Globex reopen. Saudi Aramco's cut the official price of their Arab light crude price to Asia since May. All right. They've also cut their oil exporting price to the United States for the first time in 6 months. So they're single-handedly moving the market. If you're going to slash your prices, the market's going to come down. All right. That means there's more supply and less demand in oil, likely both. Okay, that's where we're at. Big dump. We are on S&P just now. You can see it's moving really fast. Really excited for the day. Our trading room is going to clean up today, and I feel it. All right, dollar index up 0.25%, 6 days in a row. Dollar strengthening, taking out some short positions. Everyone and their brothers and their uncles and pets and cats are short the dollar, and I think there's going to be a little bit of head squeezing there over the next couple of weeks while the stock markets pull down. All right, gold's down 0.8, Bitcoin's down 0.6. Everything's being sold off this morning. News, 1 p.m. we got 50 billion 3-year note auction, at 3 p.m. consumer credit. That's the morning market update. I know it was heavy. We talked about a lot of things, but now that I'm back, I want to give you guys a good start, and we're back to trading. I love it. We're back into high season here. This is like Christmas. September to December is like Christmas for traders. You're going to get a lot of volatility, a lot of movement. September is the only month, all right, actually August is too, but a very small amount, but September is the only month in 40 years of history that's always been red. Not always. Let me rephrase. Always sounds like you should be short right now. Hurry up, short. September years of data cumulative have a net negative result, all right? So in the last 40 years, if you only held September, you would have been down in a significant amount. Every other month is green over a 40-year seasonal period. And here we are again. VIX is going up. Markets are selling off. I think we need to deleverage. I think we need to shake out some weak longs at the top, and that's how we're bracing ourselves. So today, the short side is the right side. I think we get a little bit of a rally first, but let's have a look at what we get this week. All right, let me see some of the comments really quickly. Thank you, Craig. Other congratulations. Thank you, Forex Black Box. Thank you, Mickey Man, Krister. Baby does have a beard, Krister. How did you know? He came in with a full head of hair. Doesn't have a beard yet, though. He loves pulling on mine. All right, that's what we got for today. Love you guys. Thank you for having me back. Thank you for your patience in my absence. But you were in good hands. Victoria absolutely crushed it. Love you guys on YouTube. Have a great rest of your day. And check out our trading room. We trade together every single day from 9 to 12 with the elite members. And we do it live. We have great results. Above 68% of people on average in our room are profitable with their live accounts. All right. And, that's not just me. That's the whole community rallying and coming together in our webinars to form market sentiment. All right. Because if you trade alone, you're the only idea you have a market sentiment. If you trade in a group, you get a taste of a bigger subset of data for what the real sentiment is. All right. Love you, YouTube. Check us out in our trading room. I'll see you guys tomorrow at 9 a.m. for another morning market update. And that's what I had for you today. Over and out. Trade pros in the room. Let's kick it off. Let's hash out some levels and some trade ideas and our next best trade. And let's rock and roll. We got volatility everywhere this morning. We should have an easier go at it than the last couple of weeks. So I'll hand it over to our oil desk for a little bit of an update first, and then we'll talk equities momentarily. So